Hello, everyone, and welcome to another YCharts webinar. I am Connor Kitko, and I am joined by my colleague, Joe Clevin. Joe, how are you doing today?
Hey, Connor, great to be with you. Happy New Year and excited to run through all of the Q4 events with you, especially that of 2022 as well.
Yeah, absolutely. Just like Joe and I have done the past few quarters, we're going to be running everyone through this economic update deck from YCharts and some of our best findings, our most shareable visuals, tons of good stuff to get through. As a reminder, this deck contains visuals and data summarizing Q4 of 2022. And our hope is that you can use it to navigate whatever is in store for the rest of 2023. As a disclaimer, this is not investment advice. This is purely informational and would definitely recommend if you want to research anything further, you take it into YCharts and analyze and come up with some findings of your own there. But speaking of, I'm actually going to show everyone just how to find and access this deck within YCharts. So if I come to my dashboard, I'm going to hover over support and then resources. And from here on my left-hand side, under Economic Summary Deck, you'll see our full historical library of this deck, and you can download it as a PowerPoint, leverage it whichever way you want with your clients, or use it internally, customize it, add your own colors and logos. That's definitely why we make this deck, is for you all to leverage it and use it out in the wild. If you are not a YCharts user, then you can head over to our blog, just Google YCharts blog, and you can actually download a free limited version of this deck for use as you please. And now we're going to get back to the good stuff. Just one reminder here is that all the data we're reviewing was published by different government agencies in mid-January. And so this data is as of Q4 or 12/31/2022. And we will be emailing a recording of this webinar and a copy of this deck to all attendees. So if you registered or you're on the call now, check your email later today or tomorrow, and we will be sending that recording out to you. And also, don't forget to head to our YouTube channel where we'll be posting the recording. So head over to just search YCharts on YouTube, subscribe to our channel, and every time that we post a recording of this webinar and others, you'll get an alert so you never miss some more good stuff from YCharts. Before I pass it off to Joe here to get into some data, I also want to jump back into YCharts just to show you all where you can access some of this econ information on an ongoing basis. So this quarterly deck is a great resource, and we know that a lot of you get a lot of value out of it. But if I just hover over data in YCharts and then scroll down to economic calendar here, right after the indicators homepage, I hit this tool and I can look in a week view or in a daily view. And so if we're looking at tomorrow, Wednesday here, we can see that Fed announcement is going to be coming up, along with some other good data here. And then you can click through kind of each day of the week and see what important information is going to be coming out. Jobs Friday coming soon. You can also filter here by different regions and geographies. So if you want to look at all or just focus on any one of these, the economic calendar is super dynamic and lets you do that. So YCharts users, data, and then economic calendar. And if you're not a user, feel free to start a free trial, 7-day free trial. You can leverage this econ calendar and a ton of other good stuff. All right, getting off the soapbox, passing the mic over to Joe, and Joe is going to get us into some key market data here from Q4 of 2022.
Fantastic, Connor. Thank you. And let's kick it off and dig in. So first things first, key stock market index performance to show at a high level what happened in the quarter. Kicking things off with some of these charts showing Dow, S&P 500, and NASDAQ performance, as well as some global market returns as well. U.S. stocks certainly turned the corner in Q4 after 3 consecutive quarters in 2022 of negative performance. The Dow is the one that rebounded the most domestically, up 16%. The NASDAQ about flat on the quarter, still actually in the red, about 0.8%. and the S&P 500 up 7.6 as well. It was actually the global markets that had the better quarter generally overall. Europe, Africa, Far East index up 17.4%. World ex-USA not far behind, up 16.3%. In fact, just edging the Dow there by a few basis points. And emerging markets up almost 10% as well in what was a good Q4 for equities domestically, but also more importantly, globally. And now going to layer deeper domestic performance, looking at sectors. So 10 of the 11 S&P 500 sectors had positive returns in Q4. The one outlier being, again, consumer discretionary, slipping 9.1%. But it was energy and industrials that led the way, up 22.7% and 19.1% respectively. And this is interesting to note as well that energy was the only sector out of all 11 to have a positive performance in 2022 as a whole. Everything else was down in 2022, of course, but just Q4, another strong performance for energy building off that year-long gain.
Great stuff, Joe. Thank you. Looking beyond just equities, we have some equities here, but some other asset classes as well. So this table summarizes the performance for those key asset classes, and the 1 year, 3, 5, and 10-year columns here are showing annualized performance. So the right half is all annualized. I'm going to focus on the third column here, and this 3-month look back equates to the fourth quarter of 2022, where, as Joe just noted, World ex-USA was the best performer. Notably, though, emerging markets were also strong performers, returning 9.8%, and US value stocks split those two. It was a relative outperformer with a 12.4% return in Q4 alone for US value stocks. Now, looking at the 1 year column, just near the middle of the table here, middle of the quilt, this is representing all of 2022. And commodities finished 26% higher on the year, also being the only asset class on our quilt to notch a positive return in 2022. Another super interesting point here is related to US growth stocks. So US growth still the outperformer, leading this table over a 5 and a 10-year look back, but growth has fallen to second best over just that 3-year look back. So depending on interest rates and earnings and multitude of other factors, it'll be interesting to see if that longer term outperformance for growth continues to break down, or maybe we'll see a resurgence for growth stocks soon here. All right, moving on, a lot of the same data, but now we're looking at a quarter over quarter figure, looking back at 15 historical quarters. I want to focus on just the 4 most recent quarters here. So at the left end of our table, with Q4 being at the very left edge here. And it's pretty remarkable just to look back at Q1 ending 3/31/22. In that quarter, just one asset class posted positive returns, being commodities. And the same thing happened in Q2 of 2022, where only commodities posted a positive gain. In Q3, not a single asset class was positive. And then now in Q4, every single asset class on our quilt has gained value. So certainly lots of questions still remain about US markets and the US and global economies going forward. Can't confidently say that this is a turnaround, but at the very least, probably a very welcome bright spot to close out 2022 for diversified investors of really every sort. Back to you, Joe.
And speaking of diversified investors, diversification in general, let's take a look at this slide that points out various risk and return strategies that we were able to construct with our model portfolios tool, actually, to paint a picture of aggressive, balanced, and conservative allocations. So we're looking at here 80-20, 50-50, 20-80, and an all stock, just straight S&P 500 total return for the calendar year 2022. All four strategies had positive returns in Q4, but all four ended the year negative. The 2080 allocation remained the relative outperformer over the previous year, down 11.6%. Still down on the year, of course, but that bond allocation certainly helped soften some of the blow that those in the aggressive or even all stock portfolios suffered over the year. This visual certainly demonstrates the value that diversification can provide investors during turbulent periods like this for both the stock and bond market. One quick note on this chart, they do look quite similar. So the top one there is total return over the course of 2022. The bottom one is showing max drawdown. It just happened to be that pretty much all of the negative effects started on the first trading day of 2022. So really max drawdowns are about the same there over the course of the year as total returns. But as I mentioned, this was created with our model portfolios tool, and it certainly is one of our fan favorites here at YCharts. So let's take a quick minute just to hop into model portfolios. And if you've never played with the tool yourself or want to learn more about it, this is a great visual to construct in just a few clicks. So here we are on the model portfolios page for the aggressive 80-20 allocation. Wealth of data here, super easy to see what the asset allocation is, your top 10 holdings, and a bunch of key stats right there in front of you on the quote page. There's certainly a lot of tabs we have here, ranging from holdings overlap to ESG data and everything in between. If we want to create a chart, all we have to do is click fundamental chart, and this will bring us right into the fundamental chart tool actually. And from there, you can go over to the securities tab, type in any other portfolio, security, fund, whatever you have, and it'll populate on this chart in just a couple clicks and almost instantaneously. You can then switch over to presentation view mode after you've edited and arranged the indicators and securities as you like. Download this as a PNG image. You can even share directly to Twitter if you like to grow and be a thought leader at your firm. So super intuitive tool where you can construct your portfolios, house model strategies, even build out actual client portfolios in just a few clicks. You can also upload the data right to model portfolios from an Excel file and build it all the way through in fundamental charts and et cetera. So super intuitive yet powerful tool that, again, you can get with a free trial. So Connor, back to you here.
Yeah, thank you, Joe. Moving on to bonds and interest rates, more good econ data here. So starting with this interest rate summary, fourth quarter of 22 brought some more action to the yield curve, as we were used to saying throughout last year. Treasury rates continue to rise across the board, with the exception of just the 5-year Treasury. And the short end of the curve has lifted considerably higher, as we see in our chart. The current yield curve in orange, 3 months ago in yellow, and this darker, maybe brown color is the curve 1 year ago. We said that everything moved higher except for that 5-year Treasury. We also saw that corporate bond yields receded a bit to close the year. We'll definitely see how the Fed's announcement tomorrow. Folks are anticipating a 25 basis point increase to the Fed funds rate. We'll see how that further changes this picture, but very important to note, the 10 to 2-year spread and the 10-year to 3-month spreads were both negative to close out the year. They were both right around negative 0.5, those spreads between the two yields. And as of today, or as of most recently, those recession indicating spreads are even more negative. It's about negative 0.67 for the 10 to 2-year spread, and about negative 1.2 percentage points for the 10-year to 3-month yield spread. So again, these are considered recessionary alarm bells, and we will see over the next 12 or so months if that comes to fruition in the economic data. Back to you, Joe.
Yeah, thanks, Connor. Now pivoting to macroeconomic data, looking at the world here a bit. So here we've got a heat map of various economic data points, mostly considered leading indicators and their trends over time dating back to 2010. The first four columns show a quarter by quarter change for all of 2022, and the following 12 show annual changes in the data, again, dating back to 2010. The 10-2 Treasury yield spread has continued to drop precipitously and reached levels that it actually hasn't fallen to in over 40 years. The Philly Fed Manufacturing Activity Index and the NY Fed's Current Business Activity Index both ended the year below zero, which hasn't happened since the 2020 coronavirus pandemic. We obviously know that the S&P 500 logged its only positive quarter in Q4, so it might be a little bit of an indicator to say the worst could be over with how the market performed in Q4, and perhaps the two Fed indices I highlighted might be able to dig themselves out of a rut and be on to more of a bullish reading here in Q1, but only time will tell, I suppose. Next up, we have U.S. trade balance, and this slide shows the trade activity between the USA and other key partners through September 30th of 2022. So the end of Q3 there, the latest data available. The chart on the left shows that US imports have actually declined off their high, now below $1 trillion per quarter. On the other hand, US exports increased ever so slightly, and the chart on the right shows the divergence of imports versus exports, and it's bounced off of its lowest balance ever recorded, which was in Q1. The table below there shows how imports have increased year over year in all regions. In fact, at the end of Q3, services imports increased the most in China year over year at 33%, and goods exports climbed the highest in the European Union at 32% year over year. So a lot of activity going on with our most prominent partners worldwide in the world of trade.
Awesome. Good stuff, Joe. Turning back to a more domestic topic on our own shores, back in 2021, we saw the lowest 30-year mortgage rate in decades. Looking at the top panel of that top left chart on this slide. But since then, mortgage rates have shot higher, and the 30-year rate ended Q4 of last year at 6.42%, causing mortgage originations, which is the second panel there. And then the third panel is the percent of those originations that are actually refinances. Both of those figures have fallen in kind as rates have gone higher. Looking at that table at the bottom portion of our slide, the national average home price fell marginally in December 2022 by about 0.25%. And then that national level home price has fallen by about 2% in Q4. But year over year, this level is still 9% higher than it was in December 2021. Taking a look at the other big piece of the home ownership cost equation, which is mortgage rates, they are up more than 106% year over year, which is pretty startling to see, especially as a prospective home buyer. Both the current and near-term outlooks, now we're talking about that upper right-hand chart with some sentiment data here. Both the current and near-term outlooks for home sales continue to fall throughout Q4. And according to the data from National Association of Home Builders, as well as Wells Fargo, definitely a souring picture for the residential real estate market looking forward. I am going to jump into YCharts here now, because I wanted to show some of this mortgage data and how you can leverage this in some visuals, as it's surely a pretty well talked about topic right now. So coming back into YCharts, I'm going to leverage this search bar at the top. It works just like Google. So I'm just going to type in 30-year mortgage. There we go. Now I'm taken to this quote page for this 30-year mortgage rate, get a ton of historical data, also some stats. When's it going to be updated next? When was the last as of date? And then some related indicators. So some of those things that we just saw on the slide. But real quick, just how we did with that portfolio, I'm going to take this into a chart, and then I can add something like mortgage originations. And now we have a great visual here over different time frames to kind of show how those two data points may be interacting with each other. great visual. Again, if any clients or folks that you work with are considering that big milestone purchase in their lifetime. Okay, now on to the US dollar. Joe talked about some of those trade balances. Let's talk about the currencies behind them now. So the US dollar to euro, to pound sterling, to Chinese yuan, and to Japanese yen. All of these exchange rates have fallen from their 52-week highs, which we saw at the end of Q3 and beginning of Q4 last year. All four rates are now back to that one-year average, which is still a relatively positive picture for the US dollar, anyone holding US dollars, and any US travelers who are heading abroad this year. These currency pairs are anywhere from 5 to 15% off of those peaks that we saw last year. But again, still some very important information to be aware of, especially if you're noticing that outperformance from international markets recently. Maybe that's got you interested. Definitely want to think about the currency effects of those kinds of investments as well. Okay, Joe, back to you.
Yeah, certainly a lot of people took that long-awaited trip in 2022 due to those exchange rates being a little bit of a help. So hopefully they'll sustain for those who haven't gotten to in 2023. But now moving on to our final segment and our definite crowd pleaser, our charts of the moment, with a couple extra charts this go around to commemorate the end of another year. So starting off with valuations back to the mean, looking at the S&P 500 CAPE ratio, which hit a 20-year high towards the end of 2021. But just fast forward a year later, now a sharp decline has seen CAPE regress towards average over that time period. At 28.4, still about 2 points above its 20-year average. And this is, of course, in large part due to all those market declines that we witnessed last year. But one thing to keep an eye on going forward is now with Q4 earnings progressing along, that E in the CAPE ratio might be in for some changes as we see what the results in general of this Q4 earnings season will happen here in Q1 of 2023. And then next up, we have this chart that was taken all from YCharts data, and it displays the amount of market cap lost by those losing companies in each sector for 2022. Interesting fact here is 73% of the S&P 500 ended the year in the red for 2022, but it was technology that took the particularly largest hit, almost $3.5 trillion in market cap wiped out in 2022. Consumer cyclical was next behind at around $2.4 trillion. And interestingly, no energy sector stocks lost market cap in the year. All of them in the S&P 500 actually ended positive. Kind of a fun fact there, and also the reason why energy isn't shown, because it had such a great year in 2022. And speaking of tech and consumer discretionary, 2022 saw some massive mega cap tech names cool off from previous rallies. Mega cap stocks lost tremendous amounts of market cap and were largely responsible for a good amount of those losses we saw on the last slide. Apple, Microsoft, Alphabet, and we can also throw in consumer discretionary. Amazon shrank by a combined $3.2 trillion in 2022. We saw the fall from grace start there around the first trading day of the year, as we saw from a few slides back. And the steady decline certainly was steady and continued through the whole year, resulting in that decline of over $3 trillion of market cap with just 4 companies.
Back to me, Joe.
Back to you, Connor. Take it away.
All right. Some more charts of the moment here, talking about the 60-40 portfolio. It's a potentially tough visual for the diversified investors out there. We all know that stocks and bonds fell together in pretty historic fashion last year, but that led the 60-40 portfolio to its second worst calendar year since 1997. And this is just a simple 60% SPY, 40% ag portfolio as an example here. So going back to 1997, this is the second worst year. That worst year ever was back in 2008, in which the 60-40 portfolio here fell 21.6%. So that's this dot up in the left corner. But the potential bright spot to take away is that a year later, the portfolio bounced back and brought us this number up here, an 18.5% return in 2009. So again, that 15.9% drop for this sample 60-40 that we saw throughout the course of 2022. And this is a cool visual, the scatter plot. These darker dots represent more recent data points, and the lighter ones represent data points from years further into the past. And we're going to jump into YCharts and show you how to do this. One point though, real quick, I saw a question come in from Brad. He wanted to look at the CAPE ratio with a little more history. So we can absolutely do that. I think for the sake of our visual, we wanted to look at, kind of the current market, that post-2000 market environment. How has this CAPE ratio moved? But we actually have this history going all the way back pre-1900. So lots of data here if you do want to expand that look back. Good question, Brad. Happy to show off how much historical data we have for you. Okay, back to the scatter plot. Coming into this blank canvas starting point, I'm going to add that 60-40. And I'm going to customize my metrics here so that on my x-axis, I have annualized 1-year total return. 1-year basis, so actually don't need the annualized number here. And then we're also going to look at max drawdown on a 1-year look back. And then what I'm going to do is change my scatter plot type from point in time to time series. I'm going to use a full year look back. I'm going to start in 1997 and pull this up to 2022. Click away, and that's going to refresh my chart. Give YCharts 5-6 seconds here as it loads everything up, but I'm going to change my frequency because I don't want these daily numbers. I actually want them on an annual basis. And then my aggregation is end of period, so as of the end of each year here when I chose full year. Now, finally, in my chart options, I'm going to say show color range for time series. And here's where I get those darker dots are the most recent data points. And then these hollowed out dots, this one's back from 1997. So really cool visual to show how a portfolio or any securities stats are changing over time. And again, this can be exported, can turn into presentation mode, and include this in a deck or a newsletter, what have you. All right, thanks for bearing with me there. Back to the deck. And now we're going to talk about S&P 500 winners and losers, another chart of the moment. A strong majority, 83% in fact, of S&P 500 constituents had a positive Q4. However, that wasn't enough to pull the majority of them out of a hole for the year. Of those Q4 winners, only about a third had a positive performance throughout all of 2022. And some noteworthy securities. Tesla had the worst Q4, falling more than 50% in that quarter alone. And then Occidental Petroleum on the energy side performed the best in 2022 with a 119% return and just slightly positive on the quarter. So we've got the S&P 500 on the whole here as this purple cross. Here's our line for Q4 total returns with positive and negative. And then here's our 0% for total returns on the year. Again, everything above would be a positive, everything below would be negative. More good stuff from scatter plots. All right, Joe, back to you.
Thanks, Connor. Hopefully we can see a lot more of those green dots on a full year basis in 2023, but we'll also take a look at value versus growth from the last year. Now, value investors, while still down for the year, stomached much lighter losses than their growth counterparts in what was a year of high inflation. As we saw a couple slides ago, growth names and sectors were certainly at the epicenter of the storm in 2022, and that helped to sink that growth equity style down almost 30% in the year versus a relatively relatively mere 5.4% dip for value. I'm sure that a lot of those value stocks tend to be energy or commodity names, so helping to buoy that equity style a bit more. And the S&P 500 here in the middle, down 18% over the course of 2022. And wrapping up here with our last chart of the moment and last of the deck here in the presentation, we wouldn't be remiss if we didn't talk a little bit about crypto and the wild ride it's been. Cryptocurrencies continue to fall throughout 2022 and quite precipitously. Bitcoin plummeting 75% from the start of the year, and Ethereum making a similar move. One other coin, Binance coin, fared not as bad, relatively speaking, but still felt a crunch of nearly 64% on the year. One note to make, though, perhaps January is a sign of better days ahead for crypto, as we're actually one whole month through now, 2023. Bitcoin and Ethereum are both well north of 30% positive in the month of January. So a great start to the year for crypto. Might be a sign of the selling flushing out, or it could be another dead cat bounce. With crypto, there's a certain element of you never really know. So we will see how this year progresses for crypto and if people will be buying the dip, as they say.
All right, thank you, Joe. That's all of our slides here, but we do have a couple questions outstanding, and I'd be happy to walk through those before we kind of wrap things up. So if you're curious about learning more about YCharts, then now's your segment. So we got a few questions. Otis and a couple other people wanted to know about the jelly bean chart or that asset quilt that we showed at the beginning, asset classes, periodic performance. And this is something that we offer as a template within YCharts. So it's not automatic, but if you're using the YCharts Excel add-in, which is for PC users, sorry, Mac users, you download this Excel add-in, you go to our templates, and then this one, I believe, is called Heat Map, Investment Heat Map, and I'm going to preview it. And so you will be able to select the securities via, their ticker or their code that's in YCharts, and then this template will automatically populate with those different securities. You do need the YCharts Excel add-in for this template to do that work for you automatically. However, you could come into also our tools and then time series analysis. Time series analysis, think of it like a table, but for big historical data sets. And I'm going to leverage a template here, go to quarterly returns, major asset class quarterly returns. Also have this on a monthly basis, but when I punch this in, it's going to pull up. I'm pretty sure this is exactly what we used to create that slide. So here we have all those different indices, and I can add something in if I want. So let's just say, well, we already got the Bloomberg on there. What's another index here? MSCI Chile. And super easy to customize this. I can add some summary stats if you want a max or an average on here. And then when I go to export, again, if you're using the Excel add-in, export this and all that data is going to be dynamically linked. So all you need to do is reopen your workbook and click refresh, and the latest data from YCharts is going to pop in. You can also export this as a table, or if you just want the hard-coded numbers, you can export as a CSV as well. Cool. Otis, to download, you would go to Tools, Excel, and then we have a template called Investment Heat Map. Investment Heat Map. I might even recommend just going into time series, though, and leveraging that asset class performance template, asset class quarterly returns, just because, you should chat in and kind of maybe if you need help setting up that Excel add-in, just a one-time download, but our team would be happy to get that set up for you as well. Can you walk through how you went about creating the S&P 500 Q4 winners and losers scatter plot? Great question. That was a bit of a more advanced one that we went through with the scatter plot. So Joe were you the man behind that scatter plot, winners and losers?
I believe I was, Connor. I do have those watch lists saved in my account.
Okay. So just maybe we can talk through it conceptually. I would come into the stock screener. I would look for just S&P 500 companies. So I'm selecting indices and S&P 500, right?
That's correct.
And then maybe I would look at a metric column. Well, actually, let's make it a filter where we'll say year to date total returns is greater than 0. Submit. So now we're looking at just this first part of 2023. This isn't what we did for 2022. But once I've got this number, there's all these securities, which you see there's 375 of the S&P's 504, 505 that are positive right now. And I can save this screen. And I can also save everything in my list here as a watch list. So it would say S&P 500 winners, 2023 year to date. Got that saved. And I'm just going to switch this filter around to say, let's say less than or equal to. And I'm going to save this watch list. Okay. And now I'm going back to my scatter plot. Where is it? There we go. And I can just search for those watch lists that I made. Whoops. Hold on here. Let's give YCharts a second to catch up to me. Oh, excuse me. I need to go into my lists, then my lists and watch lists. So just apologies on the miscue there. Versus using that security search bar, I need to go into list to pull in my watch list. And here's where I can search for this. So winners, submit. And then we'll also go losers, submit. And then here's where it gets really cool. So I'm going to click the gear icon to customize one of these. And with my winners, we're going to make them green. And my losers, we're going to make red or some kind of orange red. And then again, we need to customize these. So let's say year to date total returns. And now you get that positive negative picture here. Very cool. All right, we are coming up on about time here, but hopefully some of those extra walkthroughs answered some of your questions and helped you get closer to those insights that y'all are going to be sharing with your clients. To wrap things up, Joe, thank you for your time and all the insights. Thank you to everyone on the call for joining us. We hope you enjoy this review of the most recent economic data, market trends, and other insights. We will be sending a recording of this webinar to everyone who's on the call. So if you want that recording and want to review, it'll be hitting your inbox within the next 24 hours. And again, you can also jump into YCharts and access this deck if you're a user or setting up a free trial. Finally, final reminder, none of this has been investment advice, and YCharts is not acting as an advising party regarding client funds in any way. Joe, thank you very much. Hope you have a great rest of your afternoon.
Thank you, Connor. It was a pleasure as always. And thank you everyone for joining. Great to be with you.
Thank you, everyone. See you next time.